Welcome everyone, my name is Mike Hamilton from Trade the Easy Way and I'm talking to you on Sunday the 7th of December. I'm just about to go into jury service for a week. I was supposed to be doing it last week, but I was off sick last week, but yeah, they've nabbed me. I've avoided it at least on two previous occasions, but they've nabbed me now. So I will not be around much this week. In the meantime, we've only got 2 full trading weeks before the end of this year, with all bar a few days between the other side of Christmas as well before the end of the calendar year. So just wanted to show you what I'm seeing here at the moment. So I had a look at Chinese index, Japanese index, and of course Northern Europe and North America, and the volatility index is nice and low. The US dollar is, after that quite precipitous fall for a lot of this year, we are still not far off the lows of this year, so the dollar is still weak. So at the moment the fear factors are pegged back, the fear index is pegged back, and these markets after this recent drop in the middle of November has still picked up, and I'm expecting that to still follow through into what's left of 2025. However, what I do think is that I think these US markets in particular are still very expensive, and seasonally you would see profit taking in the back end of the calendar year in the US. A mediocre start, and then markets would start to pick up and pull their socks up in sort of February, March of the year, and then run into May. So on that basis alone, what I'm seeing in the market, I'm seeing a return to these highs, and then early part of the year a correction. Of course, if we start to close lower, then the correction is going to start earlier, but I would expect this to still wind up. We've got the Fed rate decision on Wednesday. Fed are expected to drop rates 2 hours before the end of the trading day on Wednesday. Like I said, with not much time left for the calendar year end. So if we push up and then meet a lot of resistance up here, and then in the early part of the year, early part of 26, I'd expect that possibly to see quite a significant drop lower, at least into that support. Come and find perhaps August levels, or if the markets really catch a chill, even lower. And then at that point I would expect markets to pick up. Into 2026 I'm expecting lower inflation numbers, fewer rate drops as the rates steady, and then a climb on the back of improved productivity and AI into 2026. And then the second half of 2026 I'm looking for an earnings and jobs recession. Alright, so I'm looking for a steady market into year end, a correction into the first 7 or 8 weeks of the new year, push up into May, further push up into the summer, and then once we get into the final quarter of next year, then I think the markets need to completely take a fresh look at where they are and have a much deeper pullback on the back of lower growth. So if that's the Nasdaq, let's look at the FTSE. FTSE is already struggling up here. So we had this push into 99.30, drop into 94.25, and then this pullback is struggling with. In fact, that was quite a significant lower close on the Friday. So if we come into 96 and hold, then we can go back to the highs. But at the moment, that looks as if we could start to peel right back already as we get into back end of the year. So at the moment there is reason to start. Let's put a 50-day average on that. Okay, so 50-day average is there at 96. So 96 is going to be the key line in the sand in the first half of the week. If we come in and hold that 96, then we could run back into 99.30 area in the middle to second half of the week on the FTSE. So if you're interested in buying the FTSE, watch out for 96. You might even want to put an order in 96 with a stop under 95.70 and then a target of 99.30. Or if it really gets going, we could see that 10,100. Pound, any forex traders amongst us? This pound has got a huge amount of resistance up there. If we hit that and close underneath, then this could see the pound really start to roll back and retrace into 127. Euro is sitting very high, so having come off 102 at the beginning of the year, recently hit above 118. We are definitely struggling. This is a big problematic area here, so if we start to close underneath there, then watch that. Strength in the dollar could be coming in with the if the rates go ahead, then we could pop above here the 117 and then climb back to the highs there. At the moment we're above all the averages, so the euro is still buyable. 115 will be an obvious place to get in, but be careful. Right, gold is struggling here. It's a bull flag, so I just think we need a dip. So if we see a retracement into 41.35, 41.50, we meet that trend line. The 50-day average gets to come down there. If we come and reconnect with that, then I think we can go and find the highs and potentially go to 4,500, and ultimately, who knows, we might make our way up to 5,000. So it's a bull flag. This is a tough area. I think we need to dip before we run up to that. So 41.35, or if you see that this week, is potentially a good place to buy the gold. Before I move on to stocks, I just want to give you an update on wheat. So we had a pop into 565, 1, 2, 3 pop, and we've got a 1, 2, 3 wave correction. Have got a gap down there at 525, so I would think it's reasonable to expect the wheat to come down to 525, at which point anyone who's interested, I would be a buyer there, because if you put a stop under 520 and that holds, then I think we can into the new year. I think that will wind up, and I think, where are we? I think my prediction for next year is a conservative $7. Tidy this all up. So if this 3-wave, 3-touch pattern down there holds, and ultimately we close above this trend line, then I think we're going to that is a good breakout pattern if it works. For it to work, we've got to close the gap, come back to above the trend line, hold the trend line, and then start to move out. Okay, that is a very, very good pattern if it works, but we've got 2 or 3 things to happen before we will see the outcome to that. Alright, that's wheat. Just going to concentrate on a few basic stocks now. This is EasyJet. So at its peak this year, we were up there at 592. We actually left a gap there. We've come down to this area of support, this ambush area. Seen a move back to 520, back to the breakout area, holding up around the middle 50% here. So if we come down to 480 and hold, I would then expect to go, for that to go and close the gap up there at 580, 590. So we've got a nice head and shoulders there. We potentially got another head and shoulders here. It's an interesting chart because it's a very steady range bound chart. We've got a very clear channel in this EasyJet. So if we to not come down here and test the low of the channel is incredibly bullish. So if we go into 26 holding this £5 mark, then prospect of closing that gap and then going to see £7, 7 plus is high. However, get concerned if we close under 450 and of course £4. If we break this low of this channel and make a new low under here, that could break down. Now related is SSP Group. SSP Group have got a 25% share of a multi-billion-dollar global airport snack business. So it had a great week last week. Still plenty of time to get in this. I don't think this is going to suddenly fly. I think this is going to pull back to 150, 156 still. Possibly do another test of 150. I don't think this is just going to go crazy. It's a fairly steady stock, so I think there's plenty of time to get in this. And so if we come back and retest that trend line breakout and hold, then next stop 190 and ultimately 225. 225 would take us back to March 24. So I really like this stock. I've been talking about it off and on most of the year, and I think there is good reason to keep very close tabs on that. Another very interesting chart. Again, I've talked about this off and on in the last 6 months. This is Softcat in the UK. So we had a blast up in June to 1918. Looked as if we were going to hold 15, and then we sunk back down to all this support down here. I think this is still a relatively expensive stock. It's the 20 price earnings ratio. I think with a decent chance that could come all the way down to 13.70. Has started to see better volumes down here as we got this nice rounded bottom. The volumes have come up. So if this is a cup and handle, I'd like to think that we could drag the handle down a little bit lower under the cup and then start to build. However, it is there is a lot of support here on an increase in volume, so you may not see it, but I'm going to be patient and see if I can into the new year pick up 13 or 13.50 area, underneath here, and then see if I can get that to go back up to the highs. That's Softcat. I'm in stocks like this one. This is Sabre Insurance. So I initially took this off up here and then bought back around here. Took a little bit of heat. We're under the 50-day average. I do not like stocks that stay under there. I've got all this support from over here. But if this does struggle, we could easily come and see 118 or lower. In fact, volumes are a concern. So if you're in this, keep your stop up. Manage your stop. otherwise, if you're not in it, keep a very close eye on it and see, because it did do a nice move last year, but we need to see this kind of volume over here. We're not seeing it, so it just makes me think that we're going to see at least 120, possibly lower on Sabre. Polar, this is a good dividends payer. Nice move off of 320. Recently got close to £6, so there's a nice three-wave pullback here. If that holds, I can see it's going back to £6 and possibly 7+. Nice potential, nice bull flag on Polar, POLR. Advanced Medical Solution and moving to 247 on Friday. Again, still plenty of time to get in this, I think. It might easily see 215. So I'll leave it there. These are the stocks I like at the moment. These are really perking up. This in particular, AMS, is perking up. EasyJet is holding up really well. And I'm keeping a very close eye on Softcat and one or two others. Hope that helps. Like I said, I'm not around much at all this week because of jury service. Take care, look after your stocks, and I'll catch up with you soon.